Right now, while you're watching this, a quiet economic war is dismantling the backbone of American agriculture. The world's most powerful farming coalition, BRICS, is erasing decades of U.S. dominance in global food markets. And honestly, most Americans have no idea it's even happening. There's a crisis unfolding across the farmlands of America. It doesn't make headlines. It doesn't trend on social media. But it's real, it's accelerating, and it's already reshaping the future of food, trade, and economic power on a global scale. For generations, American farmers fed the world. From the wheat fields of Kansas to the soybean plantations of Iowa, U.S. agriculture was the gold standard. But today, that dominance is crumbling. Not because of bad weather, not because of poor harvests, but because of a strategic economic shift orchestrated by 5 nations. Media, modern American farm machinery idle in field, farmer looking at declining crop yields, empty grain silos, Brazil, Russia, India, China, and South Africa. Together they form BRICS, and together they're rewriting the rules of global trade. What makes this so dangerous is how quietly it's happening. By the time policymakers, journalists, and everyday Americans realize what's been lost, it may be too late to reverse. So let's pull back the curtain and examine exactly how BRICS is dismantling American agriculture, piece by piece. To understand the threat, you first need to understand BRICS itself. This isn't just a casual alliance. BRICS represents more than half of the world's population, over 4 billion people. It accounts for nearly 30% of global economic output. And unlike older trade organizations, BRICS wasn't built to work alongside the West. It was built to challenge it. For decades, the US dollar has been the currency of global trade. If you wanted to buy oil from Saudi Arabia, wheat from Australia, or soybeans from Brazil, you paid in dollars. This gave the United States enormous leverage. It meant American farmers operated within a stable, predictable system. It meant they could plan, invest, and grow with confidence. But BRICS is dismantling that system. These 5 nations are constructing their own trade networks, their own financial infrastructure, and their own pricing mechanisms, all designed to bypass the dollar entirely. And agriculture is one of the first battlegrounds. Let's talk numbers. In 2023, U.S. wheat exports to China collapsed by 32%, according to official data from the U.S. Department of Agriculture. That's nearly a third of the market, gone. Meanwhile, Brazil's wheat shipments to China surged by 40% in the same period. Russia, once a minor player, is now China's primary wheat supplier. This isn't a coincidence. It's the result of deliberate trade agreements within the BRICS framework that make it easier, cheaper, and more attractive for member nations to trade with each other instead of with the United States. John Hayes, an agricultural economist at Harvard, puts it bluntly: BRICS nations are constructing a parallel trading ecosystem that completely sidesteps the U.S. They've built their own price-setting systems, their own trade corridors, and their own rules. American farmers aren't just losing sales, they're being locked out of entire markets. And here's the part that should alarm everyone. This isn't a temporary downturn, it's a permanent restructuring. Over the past 5 years, U.S. farm exports to BRICS countries have declined by 15%. At the same time, trade between BRICS nations themselves has exploded. In 2022 alone, Brazil exported over $15 billion worth of grain to other BRICS members. That's $15 billion that used to flow through American farms, American ports, and American businesses. The Wall Street Journal recently described it as a historic decline in the wake of BRICS expansion. American farmers, once the envy of the world, are now watching their markets vanish before their eyes. Here's a question that would have seemed absurd just 10 years ago. How is it possible that the United States, the country that pioneered industrial-scale farming, the nation that fed Europe after World War II, is now running a trade deficit in agriculture? And yet, that's exactly what's happening. In 2023, the U.S. agricultural trade deficit hit nearly $12 billion. Let that sink in. America is now importing more food than it exports. This is a complete reversal from the trade surplus the country enjoyed less than a decade ago. American farmers are still producing massive quantities of crops, but imports are rising even faster. And the reason comes down to one thing: price competition. BRICS countries have engineered trading systems that allow them to produce and sell food at prices American farmers simply can't match. Take Brazil. The country has now overtaken the United States as the world's largest soybean exporter. How? Lower labor costs, favorable currency arrangements, and most importantly, BRICS trade deals that eliminate tariffs and reduce transaction costs. American farmers are being forced to compete on a playing field that's anything but level. In 2022, the United States imported $194 billion worth of agricultural products. Exports, $182 billion. That's a $12 billion gap, the first significant agricultural trade deficit in decades. Thomas Lyer, an international trade expert, explains the brutal reality. U.S. producers simply cannot compete with the low production costs and favorable currency agreements enjoyed by BRICS nations. It's not that American farmers are less efficient, it's that the system itself is rigged against them. For most of modern history, global trade has run on a single system: the SWIFT banking network, powered by the U.S. dollar. Whether you were buying crude oil, selling wheat, or importing machinery, the transaction went through SWIFT. The dollar was the common language of commerce. And for American farmers, that meant stability. They could predict prices, plan harvests, and manage risk. But that stability is evaporating. BRICS nations are building their own financial systems, outside of SWIFT, outside of the dollar, and outside of American influence. They're trading in their own currencies. They're settling transactions through alternative networks, and they're doing it specifically to avoid U.S. sanctions, regulations, and economic pressure. The result? American farmers are now operating in a far more volatile, unpredictable environment. Prices for corn, wheat, and soybeans are fluctuating wildly. Profitability is shrinking. And farmers are being forced to compete with countries they've never even considered rivals, at prices they have no control over. James Winkler, a farmer from the Midwest, captures the frustration perfectly. I used to know what my crops were worth. I could look at the market and make decisions. Now, I'm competing with countries I've never heard of for prices I can't predict. It's like the rules changed overnight, and nobody told us. Even when U.S. exports remain high in volume, the value of those exports is plummeting. In 2022, the United States exported $196 billion worth of agricultural products. But farmers earned less per bushel, per ton, per acre than they had in years, because global prices are being driven down by cheaper alternatives from Brazil, Argentina, and Russia. Take soybeans. American soybeans are now selling for 10% less than they were just 2 years ago. Why? Because Brazil and Argentina are flooding the market with cheaper supply, backed by BRICS trade agreements that give them preferential access to the world's largest buyer, China. The margins are shrinking, the pressure is mounting, and for many American farmers, the future is uncertain. There's another consequence of this trade war that doesn't get talked about enough: the disappearance of the small American farm. U.S. agriculture used to be dominated by family-owned operations, small to mid-sized farms passed down through generations. But that era is ending. Today, American farming is increasingly controlled by massive corporate agribusinesses. These corporations operate on a global scale, with the resources and flexibility to compete with low-cost BRICS producers. Small farms don't have that luxury. According to the USDA, the number of farms in the United States has dropped by 50,000 in the past decade alone. 50,000. That's not just a number. It's 50,000 families, communities, and ways of life that have vanished. Small farms are being forced out of business or bought up by corporate giants. The small American farmer, once the symbol of independence and resilience, is becoming an endangered species. Part of the problem is unpredictability. American farmers have always relied on market forecasts to decide what to plant. But those forecasts are becoming increasingly unreliable as BRICS trade agreements distort global supply and demand. With huge portions of the market now controlled by BRICS networks, U.S. farmers are operating in the dark. Planting the wrong crop at the wrong time can mean financial ruin. And with volatile prices, opaque trading systems, and shifting international relationships, the risk has never been higher. In early 2023, China made a move that sent shockwaves through the American agricultural sector. The country canceled over 1.7 million metric tons of U.S. wheat shipments. To put that in perspective, that's enough wheat to fill more than 50,000 truckloads. It's a staggering amount, and it represents a devastating blow to an industry that depends heavily on exports. Why did China do this? The official explanation cited quality concerns, but industry insiders know the real reason. China is pivoting away from U.S. agriculture as part of a broader strategy to strengthen BRICS trade relationships and reduce dependence on American goods. Instead of buying wheat from the United States, China is now sourcing it from Russia and Brazil. Brazil's wheat exports to China have surged by 25%. Argentina has seen a 30% increase. Meanwhile, U.S. wheat farmers are left scrambling to find new buyers in a market that's already oversupplied. Wheat prices dropped sharply in 2024, and experts believe this is just the beginning. As China continues to deepen its economic ties with BRICS nations, U.S. farmers are being systematically frozen out. It's not just wheat. In 2023, U.S. soybean exports to China fell by 15%. Corn exports dropped by 20%. And in both cases, Brazil and Argentina picked up the slack. Brazil's soybean shipments to China rose by 18%. Argentina's corn exports jumped by 22%. These aren't random fluctuations. They're the result of coordinated trade strategies designed to favor BRICS producers over American ones. And the consequences are devastating. Lower prices, shrinking markets, vanishing profits. American farmers are in a race they can't win. If you want to understand where this is all heading, you need to know about the BRICS Grain Exchange. This is a new trading platform created specifically to facilitate agricultural trade among BRICS nations at preferential rates, with reduced reliance on Western markets and outside the influence of the U.S. dollar. It's already having a major impact. Since its launch, the BRICS Grain Exchange has contributed to a 5% drop in global grain prices. That might not sound like much, but in an industry where margins are razor thin, a 5% price decline can mean the difference between profit and bankruptcy. For American farmers, this is a nightmare. They're competing in a global market where the rules are being rewritten in real time, and they're not at the table. Trade experts warn that the exchange shifts the balance of power in international agriculture, putting non-BRICS countries, especially the United States, at a serious disadvantage. Meanwhile, China is reducing its hunger for grain altogether. As the country ramps up domestic grain production and cuts back on imports, global prices are becoming even more unpredictable. The financial instability caused by these shifts is creating a perfect storm for American agriculture. So, where does this leave American farmers? The BRICS trading system isn't going away. If anything, it's expanding. More countries are expressing interest in joining. More trade agreements are being signed. More financial infrastructure is being built. And with each new development, U.S. farmers lose a little more ground. The consequences go beyond individual farms. This is about global food security. It's about economic stability. It's about America's place in the world. If current trends continue, the United States could lose its status as a global agricultural leader within the next decade. That would have profound implications, not just for farmers, but for food prices, supply chains, and geopolitical power. The question is, can American agriculture adapt? Can U.S. policymakers create new trade agreements that compete with BRICS? Can American farmers innovate fast enough to remain competitive? Can the country rebuild the markets it's lost? Or will the dominance that took generations to build be dismantled in just a few short years? The story of American agriculture is, in many ways, the story of America itself. It's a story of hard work, innovation, and resilience. But it's also a story of complacency, of assuming that dominance once earned would last forever. BRICS is proving that assumption wrong. The question now is whether the United States will wake up in time to fight back, or whether the era of American agricultural supremacy is already over. The stakes couldn't be higher, and the clock is ticking. If this video opened your eyes to what's really happening in global agriculture, do me a favor. Hit that like button and drop a comment below. Let me know what you think. Are American farmers being left behind, or is there still hope for a comeback? And if you want to stay ahead of the curve on stories like this, stories the mainstream media isn't telling you, make sure you subscribe and turn on notifications. Because the world is changing fast and the next shift could be even bigger. Thanks for watching. I'll see you in the next one.